Founders Floor, a co-working accelerator for startups.
Hi, thank you. I'm Ben Narasin. I'm currently a general partner at Canvas Ventures. Been there for 2 years. Before that, I was an angel investor in an institutional forum. I was an institutional seed investor for about 8 years. Funded companies from Lending Club to Zenefits. And before that, I was an entrepreneur for 25 years. Took a company public during the bubble in the internet space.
Curtis Feeny.
It went really well.
My job up here is to talk about how great Ben is and try to keep Ed from participating as much as possible. Early stage venture with Voyager Capital, and I sit on a couple of large corporate public boards, so I look at retail technologies and real estate technologies as well. Interested in data analytics and Internet of Things and infrastructure around those two things.
Hi everybody, I'm Ed Lambert. I'm with Bridge Bank, which is your hometown bank here in San Jose. We work with companies all over the country from startup all the way to public. What we pride ourselves on doing is working with companies when they're young and building them until they become big, and we've done a number of IPOs, which is pretty gratifying. We're all over the country. About 30% of us are from another country. So we speak, read, and write 18 different languages at Bridge as well. And we tend to think of ourselves as entrepreneurs whose gig just happens to be banking. You're just going to behave yourself. This is going to be a great panel. We're going to have a good time.
Good. Thanks, guys, for coming. I thought we'd have just an investor panel discussion to start out for a couple minutes, maybe. I sourced all of these questions from our Founders Forum members also. But, I thought I'd start off because, investors, at the end of the day, you guys invest in sectors and technologies that are somewhat not known by the general public, that are new. And, a lot of times there's not even coined terms for these, whether it be the on-demand economy or blockchain or, NoSQL database or, a bunch of other things. And so, what are some of the sectors you guys are looking at right now, even if you haven't made an investment in them? What do you guys feel really good about right now in regards to marketplaces or technology?
I think there's a bunch of different overall things we look at. We look at marketplaces, we look at SaaS, we look at fintech. But realistically, I was talking to somebody just today about this. People have asked me, as people always do, what are you excited about right now? And I thought about that a lot, and the answer is in the last 2 years, almost nothing. I'm really excited about my portfolio companies are doing exceptionally well, but it has been way too long since I have seen an entrepreneur that's made me say, wow. I think the thing about venture is that I've funded about 80 entrepreneurs as a seed investor, and sometimes it doesn't work out, and then they want to get together and talk about what they should do next, and that's fine. And they usually will say, what's hot now? And my answer is, that's the wrong question. If it's hot now, it's too late for you. You need to figure out what's hot 3 years from now, because you're going to be the ones that invent the future. So at the end of the day, my goal in life is to sit down with entrepreneurs to hear quick pitches, as many as I can, until somebody shows me something that makes me say, wow. When Renault talked about Lending Club in 2007, that made me say, wow, right? When Parker talked about Zenefits in 13, 14, 15, whatever that was, that made me say, wow. They changed entire enormous markets. So, there's 5 things I want from an opportunity to invest in something. I need these 5 things. And we all have to remember to turn off our phones. It's just a common courtesy as an audience. Oh, okay, good. Mom's so proud that I get time on stage. She's just always... I need 5 things. People, a great idea, and a huge market if it works. And I bring this up because that great idea is usually one I haven't thought of. You guys have thought of it. And if it can create a huge market, then that's what makes it exciting, and that's what makes markets in the future that I care about.
And of course I disagree with everything you just heard there from Ben, but that was... To follow on Ben's comments, I do think there's this tsunami of data coming at the world, at consumers and enterprises. And most consumers and most enterprises are not equipped to handle that data, and there will be some sea change opportunities in that, and that is an interesting sort of basketball hoop to hang around and see what shots are taken at that. So that's one area we're mining a lot. Blockchain might play a role in it around the infrastructure side, and encryption and real-time peer-to-peer stuff. I'm going to mention 2 blockchain ideas that I think are very interesting. But the main point on the data analytics is, if you are going to invest early in a data analysis team, and we've done this a couple of times, one of which we sold to Google and one of which we sold to GE, what they bought was a world-class team that had world-class algorithms and solutions that were getting rapid adoption by real customers. And so it's very clarifying when you know that the space you're looking at is only going to be investable for us if the team has some of the best people in existence working on that problem. And that just elevates who they can attract, who they can get as customers, who they can get as channel and partners and so on. And the two blockchain ideas, people are right now looking at blockchain for peer-to-peer encrypted real-time insurance distribution, so that instead of paying an insurance company to hold all the money centrally and then paying it out as claims are made, you don't collect the money in advance. You collect a tranche of peer-to-peer connected customers through a blockchain encrypted technology, and then they all pay in when claims are made and then pay the price for that. And then you disintermediate the entire insurance industry. The insurance industry is concerned about it. There's people working on it, and the same thing can happen in utilities and other centralized, distributed. So if you think of it, centralized, distributed architectures that can be disintermediated with peer-to-peer structured blockchain, very interesting.
So my main thing is banking. So the way we look at it is that, we kind of ask ourselves a rhetorical question, okay? If you have, so first of all, what Curtis is saying is absolutely right about the team. A great team can trump a lot of different things. You could have a great technology with a crap team in a great market, and it's not going to get there. You could have a great team with a great company and a crap market, and it will get there. So at some point, at the end of the day, what it's going to be all about, and I don't care if you're a banker or a venture guy or an angel, okay? The sooner you get to being live on your dime, whatever it is you do, doesn't matter what it is, the sooner you get to getting live on your dime, the more opportunity you're going to have to get some kind of a follow-on investment. Quick sidebar to what Curtis was talking about and what Ben was talking about. There are huge amounts of data going on out there, and one of the things that I think for us as a bank, because you also want to be able to do things for societal benefit, is that what we're trying to do is that for every company we do that uses data analytics to get you to buy shit you don't need, we also want to work with companies that are using data analytics to help find a better way to fight cancer. So there's a myriad of different things going on in the data analytics field, which I think, it's such a huge field. As you kind of think data analytics, it's a whole ton of different things. Supply chain management, I think, is starting to find its way back. There's a lot of social networking kind of things still that are out there. I think the idea of being able to make life more convenient for individuals, some of the things that are working out there. At the end of the day, you stand a better chance of doing things, the more things you do B2B versus B2C on occasion. But the generality, for sure, and again, I don't care what you do, I don't care what business you're in, I don't care who you talk to, okay? Is the sooner you are ready to look at somebody and go, we're live on our dime, the better shot you're gonna have. The one thing I will leave you with too is that the longer you tell me about your technology and the less you tell me about your results, the less interested I'm gonna get every minute you do it.
Yeah. Ben, you talked a little bit about this, or you touched upon it, I guess, and I ask this question all the time because I love hearing the answers to it, but it's in regards to what makes a good entrepreneur. You talked about, you guys see thousands of pitches every year. You meet a lot of different entrepreneurs. Some of them are special, Zenefits and others, Parker, it was the wow. But is there some data points you can collect and be able to see some characteristics from successful entrepreneurs over the years that you can say, yep, these are one or two things that really I like to see in good entrepreneurs?
Sure, and Parker's an interesting example since he's gone through some travails. I did fund his next business because that guy just will never give up. He's a driven person. So, I was an entrepreneur for 25 years before I became an investor. I was an East Coast kid before I came to the West Coast. There's all these little pithy comments venture guys make. I want an entrepreneur that'll run through walls, it'll break glass. And that's fair, it's a true point. I've always believed that the number one requirement for success in entrepreneurship is tenacity. You have to be willing to fight through. Because you're not going to get funded unless you're really smart, with a really good idea, and an interesting market. Now, whether you get funded by an angel that's happy if you sell for 50 to 100 million, or whether you get funded by one of us that wants to see a multi-billion-dollar public company is a different question. You might get funded by a certain type of person, but not by another. But once you get funded, it's going to be, excuse my language, fucking hard. And it's going to stay hard. And it's going to stay hard after that. And it's never going to get easier. You're just going to get better. And when it's hard and when it gets dark, we've all lived through this as entrepreneurs. Many of you probably already lived through it. I know that I did. You know, I had a company where we were at a point where we were not going to make payroll. I had $200,000 of credit card loans, the whole thing. We were out of cash. And I had only one shot to make payroll, and I just had to make that happen. And part of being able to make that happen was not being willing to give up. Bottom line is, quitters never win, winners never quit. If you have even a little bit of a chance in you that you'll give up, you will. Because you will have never done anything this hard in your life. And that reality is a lot harder to live through than it is to talk about. Because everybody reads TechCrunch, and they read all this stuff, and they watch Silicon Valley, and they think, oh, isn't that glorious? Overnight successes take decades. You know, Parker got fired before he started Zenefits, right? And then he got fired at Zenefits, so we're really hoping the third one is the charm. But, you know, he spent years trying to raise money for the company before Zenefits. And yet when we got to Zenefits, he had 8 term sheets within 9 months for his Series A at a ridiculous number, and then, you know, on and on, $0 to $5 billion of valuation in 2 years. But nobody remembers the years before that where he couldn't get a dime, right? So, tenacity, above and beyond all else. If I love your idea and I love your intellect and everything, I've got to believe you will refuse to stay on the mat. When people beat you down, you have to get back up. There's no other option if you want to succeed.
Yeah, what he said.
Mic drop.
Just to add on to that, specifically, you got to live long enough for your luck to change. You got to survive. But the second thing is, you also got to have enough humility to know when you need people that are more qualified than you to join your team. If I had $1 for every fucking entrepreneur who refused to give up a piece of what he thought, or she thought for that matter, was the next big thing, I could retire. So the other key thing at the same time as the tenacity that we're talking about is that know what your limitations are and have enough humility to go off and find somebody that will help you. So one of the companies that I'm working with that I've talked to Curtis about, this guy's been at this thing for 2 or 3 years. He started out being the CEO and the chairman. He realized he could only get so far. So he went out and hired 2 guys that were 11 for 11 in liquidity events in one aspect of his business, and he found a top-tier sales guy in the other aspect. He didn't care what his title was in the end. He knew that to get to where he wanted to go, he had to get the right people in. And what was remarkable and why everybody wanted to go work with him was because for 2 years he just refused to get up, and he kept getting up off the mat. So you have to be tenacious, but you have to have enough humility and savvy smarts to know 2 things. 1, give up your power within your company itself, and also don't be too greedy when you're talking valuations. And your best bet to talk valuations is to be live.
Okay, one more question, I guess. Yeah, we're out of time here. We have, so I mean, a lot of companies here, when they're starting their fundraising process, sometimes for the first time. What's the best way to engage you guys? You know, is it events like this? Is it cold emails? Help them kind of maybe understand the probabilities of each of those. You know, what's really the best way?
Well, there's a vanity book by Tom Perkins called Valley Boy. You should read it. It's hard to get through his ego, but if you do, and you have to be tenacious. But if you do, he has a line in there about how the early days of Kleiner Perkins, they figured out that if the entrepreneur wasn't aggressive, connected, smart enough to nose around and find somebody that could get him an introduction to him, that they probably weren't that good an entrepreneur, because a lot of it is the chutzpah and the getting out and making things happen. And so they would not look at any deal that came in over the transom. And the fact of the matter is, you get so many deals that you almost are looking for reasons not to do them, because you can't spend all your time looking at every deal that comes through. So you're looking at high-level rejection reasons. I literally had a friend reject a deal because he found a typo on the page, and he's like, didn't want to look at it, and I think he probably made a mistake on that one. Meanwhile, he supported a toxic CEO way too long, so, you know.
I thought Google was only 1-0.
Yeah. Google was misspelled, as those of you who know how to spell Google. But I do think coming in warm is pretty much the accepted practice in the industry. It's a lemming industry, so once one person does it, everybody has to do it. It's sort of the rule.
Yeah, I'd agree. I'm sure you've heard that before. Always getting a warm intro is better than cold. I had one entrepreneur I funded at Seed who saw Ron Conway, who's the most prolific super angel of all time, and I don't agree with his process. It works perfectly for him. It just doesn't work for anybody else. Just keep that in mind if you decide to be an angel one day. He saw him at a stop sign, and they got out of their car and ran over and knocked on his window and said, "Hey, we want to tell you about our business," and he ended up funding him. So, you know, there's a lot of, it's not that you can't take no for an answer. This is the delicate balance. A warm intro is better, but you're entrepreneurs. You know, you're going to, it's funny, I give presentations all the time to brand new to this country entrepreneurs or fledgling, and at the end I'm like, any questions? And a lot of times they don't ask it, and I'm thinking, wow, good luck, guys, because if you're too nervous even to ask the question I know you must have, because I can talk really fast, and English isn't your first language, so I know you didn't catch 80% of what I just said, good luck going out there and pitching for money. So it's okay to buttonhole somebody, with the following caveat. Sales starts with the word no. Fundraising ends with the word no. When someone passes on you, that's a favor. Cross them off the list, move on. There's all kinds of euphemisms. Not really a fit for me, not really my sector, not sure it's big enough. It doesn't matter what the language is. All of those things mean I am not going to fund you. And if you want to spend the next 4.5 hours trying to convince me, my mind is not going to change. In 10 years, I'm probably working on 200 rounds with major firms. I've turned a no into a yes once. It cost me an enormous amount of personal credibility to do it. It was a mistake to do it. And it was a no that came with so many caveats, I knew he was right on the edge after having done all this work, and I managed to tip him over. I shouldn't have. That company's out of business. I lost all my money, so did my friend. And I was optimistic. I didn't say anything that wasn't true, but I was overly optimistic, and I shouldn't have been. Because you know what happened to that entrepreneur? He spent the next 3 years trying to get something that wasn't going to work, and then he didn't even get a job out of the deal. He shut his company down, he went looking for work, and he had to sell his car so he could keep paying his kids' college bills. Okay? No is a favor, but you can buttonhole whoever you want, you should, you're entrepreneurs. The only thing I would ask is respect the no. If it's not a fit, it's not a fit. It doesn't matter how much you think it is. You're not going to muscle your way through that.
Then you have to figure out what that
And
means.
I gotta say, you can read his blog also. He writes a pretty good blog. I haven't read it.
What is
lately.
the blog, by the way? What's the name?
Oh, I don't have an official blog. I used to write for print. I have a whole bunch of stuff on entrepreneurship, but if you go to my page on Canvas, there's a link. It's called like Venture in Venison, but it doesn't have a URL. Anyway, it's just all the articles I've ever written. I wrote a bunch for TechCrunch. Narasin. There's only me. I'm the only Narasin on the internet, so it's pretty easy.